Headlines about the fast-spreading coronavirus have left the stock markets a little shaky. Now, some markets are showing early signs of optimism, while others experience their worst trading period. Now, for more on this, I'm joined in the studio by Jimmy Moyaha. He is a market analyst at AxiTrade. Thank you for your time, Jimmy.
Thank you, Thami.
Now, Thursday just saw a huge slump in the global markets, clearly very jittery. How did the JSE fare? And if you could perhaps just give us a global perspective of performance throughout the week.
Well, I mean, the global markets have sort of been on a bit of a downward turn from about the weekend. You saw from last week, Friday, coming into the weekend, there was a huge jump into safe havens. And so when markets sort of reopened late Sunday evening, early Monday morning for the Asian session, most of the markets gapped down. So your safe haven currencies, your dollar, your yen, gold prices, all of that shot up. And what you saw was there were huge gaps in just about all of the markets as most of the traders and most of investors jumped from where they were to safe haven. So we've got a bit of a risk-off approach. I mean, the JSE alone overnight between Sunday and Monday closed about 200 million rand down. So it was down about 1% just on the Monday. And so far for the week, I mean, the JSE has been down about 15.6%. Now, 15.6% over a period of a week for the JSE is about a loss of value of about 1.9 billion rand in market capitalization.
And this in a week?
And this in a week, and the week isn't technically over, but we've seen a bit of a rebound today. We've seen a bit of positivity around today, not only from the JSE, but from Sasol as well. That took a bit of a hit in the week as well from what happens with the oil prices. But yeah, overall the markets have just been quite shaky on the back of all the corona and the uncertainty and the fear around that. So we've seen quite a bit of a jump into that, and that's affected the US markets as well, and all other markets around the world.
And talk to us about the Dow Jones. The U.S. market really has been very volatile, throughout the course of this past week. President Donald Trump there, we saw him addressing the media, trying to quell fears and trying to say to investors, yes, it is to be expected. It is that period. There will be a downturn, but do not fear. But do you think that he's actually had an impact? Did his message fall on deaf ears?
Well, I mean, what's interesting about the U.S. markets is if you look at where the U.S. market is sitting now, and you look at the last time the U.S. market was in sort of a similar position, I mean, global investment banks have sort of changed their sentiment and their outlook, and it looks as though we're heading into a bearish season in the U.S. Now, just to put that into context, the last time we went to a bearish season was around 2007 to 2009, leading up to the 2009 recession. And sort of what we saw in those 16 odd months was a bit of a bearishness from the U.S. markets leading up to the recession, and the size of what we lost in the Dow Jones in that 16-month period, we've basically seen that happen in the last 2 months. So just to give you a picture of how quickly things have changed now, and that's why the sentiment around the U.S. markets has sort of moved, is that from 2009 to now, we've basically been in a bull run, and it's been one of the U.S.'s longest bull runs in history. And so, like I said, the movement or the change, that shift from where we were 2 months ago to where we are now, that movement is sort of eclipsing what we saw in the whole 16 to 18 months from 2007 to 2009. So it's definitely a huge shift that we've seen, and I think that's why the investment banks around the world have sort of changed their sentiment and their outlook around that. I mean, Donald Trump is going to say what he needs to sort of quell those concerns and fears, but if you look at the reality of the movements that have been going, and yes, those movements could have been largely driven by some of the factors around the COVID-19. I mean, COVID-19 affecting China, and China being the second largest market in the world, off the back of US-China trade talks, off the back of what's been happening sort of in the last 3 to 6 months as well, could be giving rise to such sharp movements as well. So, I mean, we could see the US market still pull back a bit and sort of recover a little, but with the sentiment having changed from global investment banks and with the sentiment sort of looking the way it's looking, we could start to see a bit of a slowdown in what's been happening around the US markets as well.
You touched on this a little bit earlier on, Sasol. Give us a bit of context as to what is happening around oil and how Sasol is involved in that. I mean, we do know that they are South Africa's, largest revenue, generating company as it is. But they also did release a press release saying that they're going to be selling off some of their assets.
So the situation around the oil market just couldn't have come at a worse time for Sasol. Sasol has a bit of debt they've put into some their chemical plants and that sort of thing, and they've taken on a lot of debt for about that. They've taken about 180 billion rand in debt for that sort of infrastructure development and growth, and to service that debt they need to keep their debt to revenue ratio at a certain point. So with what's happened now in oil, it's affected how much revenue they're anticipating that they'll be able to generate. What that means now is that the debt they'd taken on, they'd said to their creditors that, look, we're taking on this debt, we're going to keep our ratios in line because we're expecting this much revenue and that sort of thing. So coming back to what happened on the oil side of things, with Saudi Arabia and Russia sort of going into a bit of a tiff there. Saudi Arabia, as we all know, is sort of one of the largest contributors in terms of OPEC for oil, and they control a lot of what's said around the OPEC conversation and the oil productions and that sort of thing. And so when the market sort of started to take a bit of a turn and there was a bit of a risk-off approach to the oil markets as well, and production slowed down, you saw that there was a bit of an oversupply in the market at that time for oil. So what initially happened was Saudi Arabia had conversations with Russia to say, between the two of us, between OPEC, between Russia, the East, we're sort of the largest producers of that oil. So if we scale back on production, we can sort of maintain price levels. And Russia basically just came out flat and said, no, we're going to keep supply exactly at the same. So what you saw was natural demand decreased, supply remained the same, created an oversupply, and the oil price sort of came down. And the oil price came down even before this conversation. I mean, this conversation happened last week, Friday, and then going into this past weekend over Sunday, Monday, oil was down about 30%. And then so from that, Saudi Arabia then also said, okay, fine, if Russia's not going to contribute to maintaining an oil price at a steady level, we're going to cut back on our oil price on our side. And so that further impacted the price of oil and saw a further slump in oil. And I mean, from a Sasol perspective, the amount of oil that they're involved in, whether it's from a generation perspective and that sort of thing, that directly hampered their revenue. And you saw that not only in Sasol going down as low as 90% or losing as much as 90% of its share value, but you also saw that in the impact it had slightly on the JSE, in that, I mean, Sasol is one of the top 10 constituents of our JSE by market weighting. They're about 2.7% of our JSE. Now, while that isn't as a larger figure as some of the other players on that scale, one, it still puts them in the top 10. And secondly, I mean, if they've lost in the last week, they've lost a market capitalization of about 40 billion rand, that's going to have an effect on the JSE. It's going to have an effect on the markets locally as well, and on Sasol themselves.
So who have been the other big losers as far as the JSE is concerned, and the devaluation of the share price?
Well, largely the mining stocks and the manufacturing sectors. I mean, this is, again, off the back of what's happening with China. China, being the size of the economy that it is, had sort of two things that happened to it in this week alone. They had negative GDP numbers, and just this morning they had completely off estimates in terms of foreign direct investments. So you can see that there is a huge concern around the COVID-19, particularly as it relates to China, and how that translates to South Africa and other emerging markets is, one, China is such a big player in the global economy, but two, 10% of our exports go to China. And we've had a 21-year relationship with China. And so if 10% of what we're exporting to the world goes directly to China, and China on their side are seeing a slowdown in GDP, a slowdown in growth on their side, what it means for South Africans is they're basically importing less from South Africa. So we're exporting less, and that's where we're feeling it, is that our output towards that is affecting the mining sectors, it's affecting the manufacturing sectors, and you can see that that's practically, in numbers, it's about the 15% that I mentioned earlier.
As in most things in life, when one depreciates, it offers opportunities for others. I'm talking now about the share price. Does this then significantly mean that because a lot of the share prices have actually fallen, that this would be a good time for those who are wanting to acquire premium shares at a less rate?
Well, definitely. I mean, if you're looking at a long-term view on increasing your long-term share portfolio and that sort of thing, you'd be looking around this time. You'd be looking to see how the markets play out to add to your long-term portfolio. I mean, in the short term, you're going to still see a lot of volatility. You could see the share prices rebound quite sharply. You could see them drop even further in some cases. But if you're definitely looking to increase some of your long-term portfolios, you might find that some of the high-value shares, your blue-chip shares, are trading at a bit of a discount from where their valuations are. And naturally, as you say, as the markets then come back and as the markets then start to normalize and stabilize and recover, you'll see that those share prices will also then go into that. But what we're seeing now is unprecedented levels of volatility. So there's no right level to say, okay, today's the day you buy the shares and that sort of thing. It's very important for investors to keep in mind that if you're going to increase your portfolio or make adjustments to your portfolio, whether that's from a long-term perspective or from a short-term volatility-based perspective, yeah.
And how has the entire coronavirus actually affected the rand and the value of the rand, juxtaposing to the currencies such as the dollar or even the euro and the pound?
Well, I mean, as I mentioned earlier, on Sunday night when all of the shift sort of moved from market sentiment on risk on to risk off, you saw that the dollar strengthened Sunday overnight. Subsequently, the Australian dollar weakened, the rand weakened, and your emerging market currencies would always naturally feel this as people sort of jump towards your safer currencies. I mean, the rand volatility has been affected by a number of factors, not just COVID-19. We've also got what we're looking at around what happened with the budget speech recently, where we're sitting with state-owned entities, where we're heading for the Moody's conversation around our investment grade status. So there's quite a few things that are affecting the rand at the moment. And again, the fact that we're so heavily impacted by China therefore means that our local currency is going to be affected by that as well. I mean, you've seen the rand start to fight and stabilize. You've seen the rand spike up to 17 rand to the dollar, come right back down to about 16 rand, sort of move quite volatile movements from the rand side of things, and that's been the case. I mean, leading up to the budget speech, if you look at a couple of weeks just before the budget speech, you look at December of 2019, which is less than 3 months ago, the rand was at around 14.10. So we've gone from about 14.10 to touching just under 17 rand to back to 15 rand to 16 rand. You see that there's a lot of volatility around the rand, and that is expected of an emerging market currency. But again, with the rand being so heavily traded out of the Asian side, I mean, it's one of the top 3 most traded currencies on the Hong Kong Stock Exchange side of things as well. And they're one of the largest exchanges in the world. So you see that the volatility around the rand on its own, coupled with what's happening in global markets, has meant that we've seen a lot of movement in the rand lately.
And what ought we to be expecting from the United States during this period?
Well, the United States is definitely going to aim to quell the concerns around whether we're heading into a bear market on their side. I mean, they've had close to 11 years or 10, 11 years of a bull run, and at some point the market will sort of have to reset and take a step back and balance itself out. But like I said, what we've seen is the reset that happened 2007 to 2009 took 3 years almost there, and here it's taken 2 months to do the exact same movement, if not more. So the US markets are definitely going through quite a bit of volatility on their side as well, and particularly heading into the US elections coming up now. Donald Trump seeking a second term. It's in his best interest to sort of keep the market as stable as possible, but if the factors are beyond the US's control, I mean, the US does have a lot of pull in terms of the markets, in terms of global markets, and you saw that when people sort of jumped into the US dollar. That definitely saw positivity around the dollar, saw strength around US markets. But what you've also seen is you've seen markets like the Nasdaq move from approaching levels of 10,000 to right back to levels of 8,000 in the space of a couple of days, maybe a week or two. So again, the volatility is global. The volatility is affecting everybody around the world. And so the US will particularly look to stabilize their markets and sort of restore confidence in their markets and in investors. But like I said, it's interesting to see now that investment banks have sort of changed their outlook on US markets as a whole. And that could be a catalyst for the rest of the world. I mean, the US markets are such a big player that something that big in terms of a market shift or sentiment shift in the US is definitely going to have ripple effects around the world.
I mean, should this type of pressure continue for an extended period of time, which assets, which companies listed on the JSE do you think are perhaps most vulnerable? Because this is the type of situation that can close anybody down.
No, definitely. I mean, from a JSE perspective, you've got a couple of constituents that are simply locally based, not involved in external or international markets as much. But if you're looking at your mining sector stocks that are going to be exporting, they could be affected in a two-part way, in that if they're exporting gold, our gold sector and the gold price is going to shoot up. As a safe haven, that would naturally happen in times of uncertainty. You could see that our gold sector stocks could improve. They could have a good rally. You could see that our financial sector stocks, our banks and that, could be affected around times of the downgrade. So it really could affect everybody on the JSE. I think a particular focus will be around what happens in the coming weeks with China and the COVID-19 and that sort of thing. I mean, the longer that goes on, the longer manufacturing is going to be affected going out to China, the longer anything that we sort of interact with on that scale is going to be affected there.
I don't know if you've taken the time to look at Bitcoin, but some are saying that Bitcoin has actually performed quite well during this time, that Bitcoin seems to be benefiting from this COVID financial crisis. What are your views on that, and perhaps the reasons why that is the case?
Well, I mean, I haven't looked at it this morning, but I mean, if we look at what Bitcoin is essentially, is that where currencies and global markets are affected by central banks, they're affected by policy and that sort of thing. Bitcoin is entirely free float, which means Bitcoin is affected solely by demand and supply. And because it's completely unaffected by laws that are made here and there, I mean, countries can impose things like cryptocurrency taxes, cryptocurrency legislation, but that takes a while to sort of implement and that sort of thing. From a free float trade perspective, if there's trade that's going on around the world and that trade is being influenced by political factors, by economic factors and that sort of thing, and people are sort of looking to alternative sources where there isn't influence from what Trump says, there isn't influence from other factors and that sort of thing. Bitcoin could very well be a solution. I mean, the crypto space as a whole, the blockchain technology around that, like I said, because it's entirely free float, it's purely demand and supply.
It's really a place of opportunity.
That's it.
During this time. But Jimmy, thank you so much for that insight as we look at the markets and see how COVID-19 has affected the global markets and specifically here as well in South Africa, looking at the JSE.